Okay, and hello and welcome everyone to the final of our PTW series exclusive to our Discord participants. Today we have BrandonTrades giving a session on using order flow and liquidity levels within Bookmap and your options and futures trading strategies. Brandon is a visionary in trading. He's an accomplished author and a passionate educator. With his extensive trading experience, Brandon's here to help guide you through the complexities of the market with ease and expertise. Brandon, could you bring the slide onto the screen, please?
Which one? Sorry.
If you could go to the third slide, please.
This one.
It's the one with your contact information on.
This one.
Perfect, thank you. So, if you'd like to get in contact with Brandon, we've got his YouTube link up there, his Instagram as well. I'll soon copy them over into the comments channel. He's also got 2 books on Amazon if you're wanting to take a look at those. The first title is The New Age of Technical Analysis, and then his second title is The New Age of Day Trading, the Ultimate A to Z Trading Guide. Brandon, if you could just progress on to the disclaimer for us, please. Okay. So, just a general disclosure before we get into this. Obviously, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The hypothetical performance disclosure. So hypothetical performance results have many inherent limitations, some of which are described below. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of the hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a 15 particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in the preparation of hypothetical performance results, and all of which can adversely affect actual trading results. So I'm going to pass it over back to Brandon now, and he'll give you his session. Thanks very much for your time, Brandon, and away you go.
I appreciate you guys having me. Trying to figure out how I want to start this. Let me 1 second. Yeah, so very quickly how I trade, and then we'll talk about how I use Bookmap in correspondence to how I trade. The main way that I trade, first off, I trade SPY, QQQ options, but then periodically I will trade NQ futures or ES futures. But the way that I trade is simply just through key levels in the market, supply and demand, Fibonacci, and then other key areas such as just basic areas of support and resistance. So, and then again, mainly trade SPY, QQQ, NQ, and periodically I will trade like Apple, AMD, Nvidia, etc. It's just the setup has to be there, but like I said, probably 95% of my trades stem from these 4 right here. So in the morning, I'll pull over this chart right here. In the morning, I'll go through, I'll do all my technicals on ES, SPY, QQQ. So like today, there was a few areas I was watching, right? I'll get it all marked out for the morning, come up with my pre-market plan, and pretty much exactly what I'm looking for on the day. So today I was looking for a reject if we got up into this supply zone right here, and then overall was looking for a bounce right here. So I already have my levels marked out for the day. Now simply what I'm doing is I'm waiting for price to trade up into this level right here, or wait for price to trade down into this level right here. And then obviously every day is going to be different. But then from there, when we trade down or up into the levels, let's see. Yeah, and here real quick, how I use Bookmap for trading. Find the key levels, wait for price to trade to the key level, and then from there, once we trade to the key level, that's when I really start to use Bookmap. So say if we just pull this up, we'll put this side by side. There we go. Say we were to trade up into this 58.23 level, and I have a bunch of examples that I'm going to show you guys here in a little bit. But say we traded up into this 58.23, what I'm then going to do from there is I'm going to be looking at Bookmap at the same time. I might have to load this a little further back. Give me 1 second while this loads. If it wants to. No? I'll just use this one. But say we were going to trade up into the level, I would start looking to see, do we have large buyers or sellers sitting at that level? So the two main things that I'm using on Bookmap is just the heat map, which is going to signify, do we have large orders sitting there or not a lot of orders, and then just the aggressive buyers or sellers. So say, you know, we traded up into my reject level. Again, I'll show you guys some examples here in a little bit. And I started to notice that we have very large sell orders just sitting in that area. So I could use that in Confluence saying, okay, well, this is a level that I was watching for a reject in the market. It's a key level. And then also inside of that level, I can see that we have those large sellers. So from there, what that does is that gives me double confluence that this area is truly valid. Now, what I'm looking for from there, pull this back up, is I'm waiting for confirming price action and confirming volume. So had we traded up into this 58.23 to 58.30 level, and I started to notice that we had a lot of large sell orders sitting there waiting to get filled. And then if I break it down to a smaller time frame, I'm looking to see, okay, do we get like an inverse hammer, a long upper wick, etc., and then the volume elevation as well. All of that to me is confirming that this level is truly valid, and then from there, that's when I can take my trade. So I want to show you guys some examples of trades I've taken in the past using this. So this was my pre-market plan going into this day. You can see that I say SPY 4-hour supply zone from 545.77 to 551.6. Large zone, but watching the beginning at 545.77, then 549.77. So that was another zone inside of the 4-hour zone. And then you can also see QQQ, 4-hour supply zone, 455.3, larger zone, so ideally watching the beginning of the zone for a reject. When I'm trading SPY and QQQ, I will simply just watch the futures, the ES futures, and NQ futures. So looking at QQQ, when we traded up into the zone, this was the beginning of my zone that we just talked about, that 455.3. So as we can see in the morning, this is a 5-minute time frame. We have a nice little push up. We go right to the very beginning of that zone. So QQQ was trading at a key reject level. SPY was also trading at a key reject level. You could also see it on ES and NQ. But also the confluence that gave me the confirmation to get into the trade is we can see on the ES futures, because typically SPY and QQQ are going to move together a majority of the time. When we traded up into that supply zone, we had a lot of large sell orders sitting there waiting to get filled, right? So we can see that with the heat map right here. Tons of passive sell orders waiting to get filled. Push up a little more into a bunch of more passive sell orders. So this is telling me that the level is truly valid. And then if we break it down to that smaller time frame, this was a 100% trade on QQQ, by the way. So the contracts went up 100%. If you put $100 into it, we sold at 200. So the confirming price action was this long upper wick at the key level. So I like to understand where are we trading, because yes, we have a green candle. Yes, we have green volume, but the upper wick and where we're trading my key reject level plus the large sell orders. We get that long upper wick, elevation and volume telling me a lot of sell orders got hit. So as a result, I got short and my stop loss was literally right above this high. So I was risking, what, 50 cents, give or take? And QQQ ended up dropping, let's just say 440 or 450, let's say 455 for simple math, about $4, right? So risking about 50 cents to make $4, excellent risk to reward. And that's exactly how every trade is going to look for me. Again, I'm finding the higher time frame setups, waiting for price to trade into it, looking at Bookmap to see if there's actually sellers there. Because had we traded up into this level, right, and I didn't see the large sell orders, that's not a trade I would take. So I'm finding the key level and then waiting for Bookmap to confirm. And then obviously price action and volume. So that was just one example. Now another example I had is this was, I don't know how long before open, I didn't get the time on this, but I had a 45-minute demand zone, right? So my game plan for the day was to look for a bounce at 50.21 to 50.06 on ES. I also had a supply zone up here at 51.03, so had we traded up into that, I would have looked for a reject. So have the game plan, have the higher time frame levels that I'm watching. Where can we react in the market? So then you can see a little later in the day, I ended up posting. This was after the market open. Main level I am watching, or actually this was 25 minutes after market open. Main level I am watching is demand at 50.21, which again you can see is the beginning of this zone, 50.21, right there, which also ended up being 497 on SPY. Then you can see I also say seeing a lot of buy orders in the demand zone. I have calls pulled up and we'll let you guys know if I take. So we have the key level, the 45-minute demand zone, waiting for price to trade down into it. As price trades down into it, I look at Bookmap. We have a significant amount of buyers sitting there, which is, I mean, you can see all the buyers here. Like that's a very thick area of buyers, right? Stemming all the way from 50.24 all the way down to 50.20. So as we came down to the level, started to notice the buyers, and then from there, because this is telling me that, you know, it's a valid zone, there's actually buyers waiting to get filled there. Break it down to a smaller time frame, either a 5-minute, 2-minute, or 15-minute is what I'll use. And it looks like I ended up taking the screenshot off the 15-minute right here. But you can see that we went right down into the zone, wicked pretty much right off of it. We fell like half a point short. And then we started to push back up. It looked even better on the 5-minute and the 2-minute. I just don't have a screenshot from them. But you can see that that marked pretty much the dead bottom on that trade. The absolute dead bottom. And then we rallied back into the opening print. Or opening high, sorry. Instead of new high a day. So there's plenty more trades that I've taken using this exact scenario. I just don't have all of the Bookmap screenshots. But again, it's the same thing every single time. Wait for the higher time frame key level, wait for price to trade to it, look for Bookmap to give confirm that there's orders sitting there, and then break it down to a smaller time frame to see if price action confirms with volume. And that literally makes up my entire strategy as far as day trading. Now, what I can also use it for is trim areas, right? So say, you know, we get in down here towards this 50.21 level. We start popping back up to the upside, say I'm in calls or ES longs, whatever. We start popping back up and we get to like 50.32. And I notice that we start to get large sell orders sitting at 50.32. Well, if that's the case, I can use that to my advantage and say, okay, there's large sellers here. We could potentially reject the level. Let me take a trim off and then move my stop loss up. And then if we blow through that 50.32 and take out those sellers, then I'll look to see where's the next area where we have sell orders. Hopefully that makes sense. But yeah. And then also another thing I like to look for when we trade into our key levels is, like we can see in this bounce scenario where we had a lot of buyers, but we didn't have a large area of sellers sitting above it. Like we had a little bit of sellers here, but nothing like this, right? In this trade, I remember this. It was a little more stubborn because we did have those buyers sitting there. But as soon as we lost the buyers, that's when this QQQ ended up flushing. And that's when we got the move. But, yeah, that's really the entire strategy and how I use Bookmap. I have been playing around with the icebergs a lot, and I do really, really like it. But mainly it's just the heat map and the aggressive buyers and sellers is how I use it. So, any questions, or Dan, anything else you want me to touch on?
There's nothing from me at the moment. If anyone would like to get their questions in, please do ask them within our chat. Do not try and raise your hand, as unfortunately the stage will get a bit overburdened with people. But please do write your questions into Brandon inside the text channel just on our right.
What you guys got for me? I like questions, so please type them out.
This is also your last chance to get questions in during a Discord exclusive Pro Trader webinar. Our next series will be soon, but we're not advertising just yet. So ask the questions now or forever hold your peace, guys. So we have a question from Noble Joe. Sorry, I'm getting some mic issues my side.
What was that?
So apologies, I'm getting a few mic issues my side. So we've got a question from Noble Joe. How did you map out the rectangular area of liquidity?
Are you talking about the demand zone? Supply and demand zone?
I believe so.
See if he says yes real quick. But actually go ahead and delete this because I gotta redo my analysis later. Yeah, so very quickly for supply and demand, supply is where we're looking for sellers, right? So all I'm looking for is a small green candle, like a very, very small green candle like this, before a very large flush to the downside. So that's exactly what we have right here. Therefore, I would take the open of that green candle to the upper portion of this red wick, and I would project it forward. So then I would just look for price to trade into this. Again, use Bookmap to see, do we actually have sell orders sitting, the heat map with sell orders between 58.25 to 58.30. If we get that, perfect. And then I'll look for confirming price action and volume. And then vice versa for demand. We're looking for that to become support. So what I'll look for is a small red candle. Where is it? Small red candle like this before a very large aggressive move up. Mark the low of that red candle to the open of the red candle, and then that's my demand zone. And that's where I want to see buyers come into the market. So if you get the buyers, again, use Bookmap to see if those levels are truly valid, and then wait for the confirming volume price action. Hopefully that answered your question.
That was a great explanation. Thanks so much, Brandon. So we've got another question here from Dreamer Abhi. He says, excellent question, excellent session, Brandon. How do you determine whether huge liquidity will be absorbed or rejected?
To see if it's absorbed or rejected, just watching the price action, because we could have very easily blown through this area, this whole like 50.23 to 50.20. But because typically when I'm trading like supply and demand or any level, I like to watch the beginning. So the fact that we had this very large area, I didn't take the trade as soon as we hit it. I took the trade as we started to confirm off the level with the price action. So again, we could have just blown right through it, or same thing with the QQQ. Sorry. I didn't take the reject just because we came up into the area of liquidity. I took it because we started to confirm that we were not going to push above that level, judging based off the price action and the volume. And once the confirmation candle, which in this scenario was this one right here, my stop loss is always right on the opposite side of that confirmation candle. So stop would have been above here in this scenario, or it was above there in that scenario. And then with this scenario, my stop was right below here. And again, it was the 5 and 2 minute were definitely way better for the confirmation. I just don't have that screenshot because I took this a while ago. So yes, judging on the price action, if we had just a bearish candle that blew right through it, I don't care about it. Level's invalid. But if we get the confirming price action, confirming volume, I'm game, I'm in. And that stop loss right below there.
Again, brilliant, nice and succinct. Thanks very much, Brandon. We've got another question from Mr. No Luck. So what's the exact structure that confirms to you the rejection of the iceberg?
I think he said that also answers his question.
Ah, sorry, my bad.
Yeah.
My signal is really not catching up well for this. So we've got obviously yes, this is being recorded. Unfortunately, we're not going to share the recording until a much later date from now. The idea being, we want you all on Discord. We've got a great community here, and it's wonderful to see you all interacting. So does anyone else have any other questions? We've got one from Mo. It says, sorry if this is a general one. It's my first time using Bookmap. Are you able to go through how you read the layout in front of you, just to help me go into more details of it later? Mo, what I would recommend to you is to check out the Learning Centre as well. I'll drop a link to that in the chat.
Do you want me to go over it? Again?
Yeah, so I mean, if you could just go over your brief layout, that would be ideal. But I'm just going to post over the link to the Learning Centre here. Obviously, everyone that's within the room, please do go through the educational materials that are on the Learning Centre. There's hours of video content on there, as well as our schedule of live events.
Yes, so I don't know why it won't let me load the TM Lite, so we're gonna have to deal with these annoying bands. But pretty much what I would be looking for, again, it's the main areas of where we have the large buyers and sellers, and I'm waiting to see how we react to it. But most of the time, it's just like, again, the key levels that I really, really care about. But pretty much we can see right here, and I like to make it so I don't know how to. I don't know how I got rid of all the other colors, but you know how there's like, I'm sure most of you guys have it, so you can see the light blue or whatever. I turn my, I guess, intensity down, so I really only see the big areas of buys and sells. But pretty much this orange, red, yellow area, it's just a thick area. We have a lot of buyers sitting here. So I'd like to see what happens when price gets there. Obviously, you can see we blew through right all the orders. We had a little bit of news based off NVIDIA, so we did end up blowing through all that. But then it would be the same thing to the upside. Just again, these are larger areas of buy and sell orders in the market. Or actually, we kind of have one right here. So that's all I'm looking for. Where are the buyers? Where are the sellers? And then the bubbles are pretty much just telling me the amount of aggressive orders. So these are just the thick areas with the red, orange, and yellow. Those are just limit passive orders in the market waiting to get filled. The red and green circles are aggressive orders. So for the passive orders to get taken out, we need aggressive orders, right? So if we get a large red circle and we blow through the level, that's telling us there was a more aggressive sellers or more aggressive participants than the passive participants. But again, I have found the most success not simply trading just based off of this, but looking for a combination of this plus a key level on the chart. Hopefully that answered your question.
That's great, Brandon. Thank you. Keep the questions coming, folks. We've got 30 minutes left of the session, and we've got a lot of time to get through all of your most pressing questions. In terms of the heat map slider I've just seen you use, do you ever play about with the color customization at all? I've seen that some users find it helpful to actually reverse the colors, and so use sort of like red bubbles for positive areas of CVD. Excuse me 1 second. Yeah, do you ever change the configuration of the layout, or do you tend to keep it on the standard
No,
open the box experience?
Yeah, I just leave it like this. I've been using Bookmap, I think maybe like 2.5 years, something like that. 2 years, 2.5 years. Always stayed the exact same.
Very nice, very nice. So we've got another question from Noble Joe. Food for thought, not including Wyckoff rationale. If we're looking at a red candle, have you thought about marking the TOP or body of the red candle and opposite for the green? Thoughts are, this is again going on to the color colorization. Thoughts are, if we collectively decide that we're losing a level, wouldn't a red candle indicate a solid level of rejection, and again vice versa for bullish candles? Whereas the bottom of the respective candles are the tail end of the rejected moves. In short, marking the bottom of reds and tops of greens should actually be the opposite of what market sentiments initially set out to do. So it's an interesting point that you're raising there, Global Joe. If you'd like to expand on it in the comments, please do.
Yes, hold on. Let me make sure I'm actually understanding this correctly. I'm going to pull up a trade that I've taken in the past and see if I'm understanding the question correctly. Let me see. Hold on 1 second. Trade recaps. Hold on, I gotta scroll up and find it. Because I'm thinking of this trade that I took a while ago. That's like a perfect example. All I have to do is find the screenshot. But yes, feel free to type questions in the meantime while I find this and I can get to them. How long ago was this trade? All right, so here is one. And here is, actually, this was the one I was thinking about. So if I'm understanding your question correctly, are you like, I don't know, I'm also kind of confused. Like, would this be a good example? Like if it's a red candle at a bounce level? Because this is a trade I've taken in the past. This was a demand zone that I had 5,300 to 5,294. And yeah, we had this huge red aggressive candle down, but understanding where we trading at from a higher time frame perspective, well, we have this nice little lower wick right off the level and an elevation of volume. So had I had the Bookmap screenshot, I can guarantee you there was buy orders sitting here getting filled. So the aggressive participants were not able to overtake the passive participants, right? There was more buy orders than there were sellers, and we held the level. Again, yes, it was a red candle. Yes, we had a lot of red volume, but I can guarantee you a majority of this volume actually came in down here on the buy side. Is that kind of what you were asking, or no? And again, I took calls on this. Calls, longs.
With muches.
In the meantime, we can move on to other questions.
Sorry, I was just checking that I was able to speak. There's a bit on the back end from me. I think we've got some works going on in the street or something. So we've got a question or a comment rather from Zekless. I find price action in futures hard to follow versus equities. What are you looking for to confirm your thesis?
Yeah, so honestly, personally, I think the opposite, to be honest. Because like that's why I very rarely trade individuals, like Apple, Nvidia, etc. I feel like they're more like the price action's harder to read for me personally. Again, everybody's different when it comes to trading, but I've just found with ES, NQ, SPY, QQQ, as you continue to trade them for a longer time, you understand their overall patterns. So I know with ES, NQ, SPY, QQQ, supply and demand works amazing, right? Individuals, Nvidia, supply and demand doesn't really work. Like if I'm trading an individual stock, you'll never see me draw a supply and demand level. They just, to me, they don't work. So pretty much, again, what I'm looking for is just any key area that we could potentially trade to, and then seeing how do we react to that level. So again, like the market's been kind of weird this week. It hasn't really offered much opportunity, but my key level today again was 58.25 to 58.30. That's a level that we could trade up to. Or we also had a trend line that we traded down to yesterday. Actually, a few times. Right? So where can we react in the market? That's the first thing that I'm looking for. Where could we potentially react? And actually, see, we kind of broke below that trend line. We're reclaiming it right now. Wait till we trade to that key level. We also have a level over here that we could watch. It's a larger zone, but it's something I would definitely be willing to watch had we gotten down there. And then just simply waiting for us to trade to it and see if we get that confirming price action and volume. That's it. Like trading intraday setups, I'll take them. They're just not my favorite. If I'm going to use size in the market and where I'm like, I have my edge and highest accuracy rate is at the higher time frame levels. So I'll start on a daily, break it down to a 4 hour, 2 hour, 1 hour, 30 minute, 45 minute. So yeah, again, key level, how do we react? If we react in according to the key level, take the trade. If we don't take the trade. Wait for the next setup. Again, hopefully that answers your question.
Another user's question. Brilliant. So I think you've actually answered Tamatoa's questions well there, with it's asking, please, what higher timeframes to use for supply and demand zone identification? But you've just gone through that, so thanks very much. Dr. Crab asks, what is the dotted white line? So Hopefully just an easy one there. I can't actually see a dotted white line on your screen at the moment.
Yeah, I took it off. It's just a 21 EMA.
So Mr. No Luck has got just a quick comment saying today's having a lot of conflicting signals working against each other in indices indeed. Very good comment. I mean, it's been a bit of a crazy market activity for the last few weeks, particularly around the 50 base point rate hike. But, you know, it's the market. We don't determine it. It determines what we do. So let's go for the next question here. So Mo has another question. Are you able to analyze the NASDAQ chart now while we're live, or is there seem to be big consolidations up and down, just to have a live example? So if you'd like to bring up the NQ or the ES on Bookmap, that would be great. Just for sort of like a quick 1 minute analysis or 10-minute analysis, however you feel comfortable, Brandon.
Yeah, so again, the same thing I would do. Higher time frame perspective, where are we trading? So if I were to look for a bounce on NQ, it would be in this general area right here, anywhere from 20,200 to 20126. If I were to look for a reject, it would be up here. Again, most of like what's happening in between it, I don't necessarily care about. I only care about what happens at my key levels, right? So I have my higher time frame levels. We pull up NQ, and I don't think it's going to load the TM light when we are down at that level. Let's see, 20175. Again, this is where I've been playing with what was this? Hold on. Traded down into it. What was that? Yesterday, this morning. This is at 2:30, which is going to be 12:30 right here. So I will say personally, this is why I watch ES more as far as Bookmap, just because NQ, I mean, like the orders are really, really hard to read. But as far as like, where did I see it? I saw that we had a lot of stops in this area. But I don't know if I would actually end up taking this trade just based off of Bookmap. It would be more so just the price action at this point. But essentially what I would be looking for again is like a larger amount of buy orders, which NQ is very hard to read on Bookmap. But I would be looking for a larger area of buy orders. And then, yeah, again, we came down into the level. Yes, this is a red candle. Yeah, we have red volume, but look at that long lower wick and where we're trading this 4-hour support zone that we have, that we broke above, came back, retested it yesterday, retested it again today. So that's essentially what I would have been looking for a long entry. And then again, break it down. This confirmed your long entry. If you didn't get it here, you got it here. And your candle or your stop loss right on the opposite side. So again, that's pretty much what I'd be looking for on NQ. Actually,
Thanks very much, Brandon. Just obviously a quick reminder for the audience. Do pay attention to the disclosure. It will be listed in the YouTube link once this recording is uploaded. And I can copy it into the chat if we would like. However, please do bear in mind these are hypothetical results, and no past performance is not an indicator of future success. So we've got a few more comments from Noble Joe. He says, perhaps I'm splitting hairs, but if you mark the top of the red candle, is it more or less accurate than the tops of greens in layman's terms? And then he follows up further down with, the idea is that the tops of reds and bottoms of greens is where the market shifted sentiment, not the other way around, even though that's the conventional understanding. I could be wrong here, and I won't be ashamed to be wrong.
If you're talking in the terms of supply and demand, it just matters which wick is lower or higher in that scenario, if that's what you mean. I don't know if it is, but like in this scenario, again, we're looking for a small green candle before a large flush down. Had this green wick been like up here, I would mark the top of the green wick. But because the large aggressive move down, the red wick is higher than the green wick, I would mark that. And then with that ES example, like this, because we have the small red candle here before the large aggressive move up, because the green wick is lower than the red wick, I'll mark that, the green wick. But had the red wick been lower than the green candle, then I'll mark there to there. Hopefully that answers your question. Again, I'm still kind of confused by it, but hopefully that's correct.
I mean,
And
it's what we're here for, is to dive into the minutia. Um, so, I mean, just a question from me at the moment, Brandon. When you're using your main sort of higher time frame call options plays, how often do you hedge them with futures, or do you hedge them with futures? And sort of like, what's your process and methodology there? If you could just go back over that, please.
yeah, I only trade directional. So if we come up to like my reject level and we confirm it, I'm only taking puts or shorts. And then vice versa. You know, if I'm looking for a bounce, say we ended up bouncing off that NQ level, I'm only looking for longs or calls on QQQ.
Okay, so you don't hedge at all then in that case.
Correct.
Oh, very interesting, very bold strategy. Another one for me is just sort of like, it's a question I tend to ask a lot of traders. So if you were to start from base level again, you know, you're just getting started in the industry, you're looking to see how you can quickly upskill yourself to get to the level that you need to be. Where would you start?
So from my 7 years of experience, where I would start is, again, this is just what makes sense to me. This is what works best for me. Everybody trades differently, but understanding where can we see an overall shift in sentiment in the market. So I mainly play bounce levels or reject levels, understanding where can that actually happen. So however you find your key levels, it doesn't have to be supply and demand. I mean, if you really like trading Fibonacci, which actually came into play, what was it? Right here. Pivot low, pivot high. If you're at just playing Fibonacci and that's how you find your key levels, then stick with it. Or if you just like basic areas of support and resistance or smart money concepts, whatever it is, find where can the market shift. So once you find those levels, get really good at understanding just overall volume price analysis, and then yeah, risk management. Those are really the three things. I wouldn't go too heavy on the indicators just because they're only there to help indicate, but the main thing that's going to tell us what's going to happen is volume price action.
Brilliant. Do you tend to use market pulse at all when you're trading to determine VPI or any of these factors?
Market pulse through Bookmap.
Yeah.
Um, Mainly it's just like I've been playing around with those icebergs and the stops recently. I haven't really incorporated market pulse too much yet. I've dabbled with it, but not. I haven't seen it enough uh, to help give me an edge, if that makes sense.
No, that makes complete sense. I think it's something you just need to practice with quite a lot with them. And obviously, every trader is different. Everyone's going to rely on the signals differently. We have seen one of the Academy members recently has kind of reinvented it for themselves and created a visual indicator through a portable speaker that they've hooked into Market Pulse. If anyone would like to watch that, it'll be on the previous Bookmap Academy coaching and mentoring session. You can find it on our YouTube. But yeah, I just find it quite an interesting indicator that people tend to use.
Yeah,
So
and
we've got. Oops,
sorry.
sorry. Please continue.
I was gonna say, like you said, the way to get really good at just anything in the market is just seeing it happen over and over and over and over an extended period of time.
This makes perfect. Do you tend to do so in terms of like retrospective analysis, and if you're doing any back testing, do you use replay mode for that? Do you tend to sort of like have a bank of trades that you're looking at? Like how would you go about the process of back testing a new strategy, perhaps?
Yes. So the way that I backtest is, sorry if I'm blinding you guys right now, but what I'll do is I go on TradingView. It's like what, $15 a month to use the replay mode. I'll go to a 5-minute time frame, close my eyes, scroll back, and obviously we're gonna find when the market's open real quick. I don't know why it switched from New York time, but I'll switch on a random spot, or pick a random spot, sorry. Where's New York? There it is. And then if you want, I mean, you can start adding your key levels. The only issue is like right now the market just opened right here. So if you switch to like a 4-hour time frame, it's going to show you what happens. Obviously, we're very bullish off of this move. But if you want to add your key levels, and then again, a way to get really good at reading intraday price action is just by staring at this 5-minute time frame and going bar by bar. and seeing what can happen next. So that's what I'll do. And then, like, obviously this isn't a trade I would take, but say I just went short, right? It'll put in the position. You can put your stop loss. Let's just put it all the way up here. Take profit, whatever. Then you can let the trade play out and see what happens. And then you can just see what happens from there. Just close this out. Boom. So yeah, that's how I go to go through backtesting.
Brilliant. Thanks so much. I mean, backtesting is something that's particularly interesting for me, just because obviously I help a lot with the academy, and that's the main thing we're doing there is backtesting, finding new strategies, and trying to just refine that edge. So we have got one more one question from Zeklus. So, do you do anything special to filter out the bracket orders in Bookmap? I assume you're going to talk about TMP Lite here, unfortunately. So, if you could just give a quick moment's notice on that, or just talk about it, please.
Yeah, so just using TM Lite's gonna help you a lot. So like if we pull up ESZ on Bookmap data, you can see that we have these annoying, I think the way that Bruce explained it is algo orders or like band orders. And it makes it very hard to understand where the order's actually sitting. So if you have access to TM Lite, all you'll do is click configure add-ons. And then, where is it? It should say Trader Map Lite. All you gotta do is check that, and it'll pop right up with this. So what that does is now we go from this, the very annoying filters, or not filters, sorry, very annoying bands, to then filtering it out and seeing the actual orders. So TM Lite is something that they ended up adding because this was recent that this ended up happening. I think like maybe a few months ago is when it started happening a lot. So yes, highly suggest getting TM Lite if you don't have it already. That way you can help filter out the orders. It's been a huge help for me.
It is also free with Global and Global Plus subscriptions. It's actually the free version of our paid add-on, which is Trader Map Pro. It's specifically for the ES and NQ at the moment. Sorry, I've tried several times. Mo, I'll follow up with you directly in DM about that one. If you just want to send me a quick message now, we can talk about that after this session. Zeklus also says, thanks for the explanation. So, I mean, what would you like to go over, Brandon? Is there any particular markets you've been looking at with a keener eye other than indexes at the moment, or have you been sticking solely to ESNQ?
That's mainly where I trade, but I also I swing trade options a lot. Like on individuals, that's like where I really thrive is swing trading. I would say if there was an area I would watch, it'd probably be the silver market. I've been in silver leaps, $25 calls I entered at the end of this quarter right here. So I've already caught a nice pop up, but I mean, if we're looking at the quarterly time frame, even if you want to take advantage of it through, silver futures, SI, I mean, that's a very beautiful quarterly chart. So anything silver, that's what I like. I already got the leaps on SLV. It's a huge quarterly symmetrical triangle breakout, but also something I'm looking to add is Rio at the end of this quarter. And this is my swing trading chart. So it's a silver miner. Anything that has to do with silver, I'd keep an eye on it.
Brilliant. That's kind of interesting that you're a silver trader and you do look at that market. Someone that's more interested in crypto personally, I actually do tend to look at the equities quite a lot, especially silver and gold. So it's interesting to see you on that. Just trying to see what chart you're on at the moment. Rio, of course, yeah. That's really interesting. Do you trade crypto at all? Is that something that enters your sphere? Or are you sort of more solely on the indexes and equities then?
No, I just hold Bitcoin and Ethereum. Like I'll use the charts to understand when should I add. Like I just added Ethereum. What was it, like sometime last week? It was this candle right here. So yeah, I mean, really, I'll trade wherever I see opportunity. But as far as crypto, just long-term holds, especially Bitcoin right now. Do want to show this real quick. Monthly time frame on Bitcoin looks very, very good.
We are just about to get to October, as they say.
Yeah, and I think with the rate cuts, it's going to help a lot too with crypto.
Definitely. Do you trade options with crypto at all, or just solely spot?
I mean, there's stocks that you can take advantage of options, like Coin, which is Coinbase, or the miners. So the people that actually mine the Bitcoins, like Riot, Mara, Hut, and there's a few others. So again, like if I see opportunity, or like if Bitcoin really starts to break out and it does head towards that 100K level, the miners and Coinbase are definitely going to go with it. So I would just look to take advantage of options through them.
Interesting. I was meaning more sort of like crypto specific options. So obviously on Deribit you can trade options order flow there, but it's a whole other kettle of fish. So we've not had any more questions at the moment. So do get them in, guys. It's very important that we've make use of the session. We've only got another 10 minutes to go. I can see Mr. No Luck typing there again. Excuse me. I can also see that you've got Coin up there. Coin has been a particularly interesting stock. I don't often find that it mirrors BTC so much as mirrors overall volume within the crypto space. You start to see the volume decline, Coin will also decline, but then that's how they make their money, isn't it, through fees? Okay. So just trying to think what else we can go through today while we've got your very valuable time. So Azriel asked, can you talk a little bit on CVD, please?
I'll be honest with you, I have never used it. Like it's on the chart. I've just never actually used it. But from my actually I can't even explain it, to be honest. I've never used it. It's just not part of my overall strategy.
Very valid. I mean,
sorry, that's like one of the questions I can't answer.
we have got a lot on the Learning Center that will be able to answer it, so don't worry too much on that front. Azriel, if you want to take the link from above, I've already linked it once, but I'll link it again here. So Mo is asking about COB and SVP. What does it mean? So SVP means session volume profile. I can answer that one directly off the off for you. Do you tend to use those in your trading at all?
Mainly just the COB, because it reflects like the current orders.
So do you bring up the DOM very often as well?
The DOM?
Yeah.
No.
So obviously we've got the DOM Pro attachment as well that you can add on into your setup.
This is mainly what I watch.
Fair enough.
Yeah.
If you know what you know, why break it?
Exactly.
I can see a few more users typing, so just to let you guys know, we've got 10 minutes left, so do get them in. So Mo is asking, are these COB taken of aggregated L2 data or from some of the exchanges, brackets, not all?
From my because level 2 is your limit orders, passive orders waiting to get filled. That's essentially what we're seeing right here. So I would assume so, but I'm not like 100% sure. The way that I best explain Bookmap to people is it's a mixture of time and sales, which is your aggressive orders, and then your level 2, which is your passive. So I don't, Dan, can you touch on that?
So I can talk a little bit about the types of exchanges that it's drawn from, and also we could talk about the multi-book attachment, which allows you to view multiple exchanges at once. What I would say is this is probably better suited to a different kind of session. Might be worth asking Bruce during his next session, though. He'll be quite happy to dive into that. We have got a question from Mr. No Luck as well, though. Mentioning crypto, what is the most crucial and impactful news to keep up with in regards to it?
I say the rate cuts, personally. We saw what happened last time they cut the rates.
Speak of Bruce, and he shall appear. Welcome to the session, Bruce.
Hey guys, sorry, I don't want to interrupt, but yeah, if I think there was a question there on the passive orders.
Yeah, so Mo asks, are these COB taken of aggregated L2 data or from some of the exchanges, brackets, not all?
Well, I mean, we're looking at a futures product. I mean, this is, oh, you mean the Trader Map Lite, maybe? Is that the question? I mean, futures is just one exchange. It's the CME, that's that. So if it's for stocks, it's going to be a little different depending on what you're connected to. Maybe NASDAQ or EDGX or both, or also MBBO. So I don't know if that answers your question.
He says, yeah, I meant for stocks, and thank you.
Okay.
Stephen,
Okay.
Stephen also mentions as well regarding the previous point about what's the most crucial and impactful news to keep up with. Correct in saying I was going to mention that as well with rate cuts. So, I mean, you're just joining the session, Bruce. Are there any questions you'd like to ask Brandon?
I missed everything, so I don't know.
Well, welcome.
Oh, no, Brandon. Yeah, I'm sorry I missed it. I had another presentation. But you're looking at most of the. I mean, from what I understand, you're looking at your levels, your supply and demand, high liquidity. Very, very simple, very straightforward.
Yes. The simpler, the better. That's how I
Yeah.
like to trade.
So, are you? Um, I'm just kind of curious how you're using it with your options trading. Because are you going directional? Are you selling premium? Are you using zero DTE and being very aggressive with the order flow and trading?
Yeah, so I trade 0DT, SPY, QQQ options, and then I said earlier I periodically trade futures. It just really depends on like how options are moving that day. Like today, options did not move, so I did take a futures trade. But yeah, so it's always very directional. Most of the time, 0DT options, and then I really just wait for us to trade into the key level and see how we react.
Yeah, yeah, yeah. Like go over that level that you just looked at there. You had marked up. I think a little higher time frame. Yeah, up there. So beauty. I mean, you nailed that one.
And honestly,
And
I could have probably marked like this low right there and like definitely taken a reject off of that because we did confirm that. It's just sometimes the wick of the supply and demand is kind of hit or miss. So I like to narrow it even further and wait for the body. And sometimes we'll get it. That's just where I notice I'm more accurate, or where it's like more accurate and higher probability is at the actual body. But you can see, regardless if you like to take the wick or not, this candle confirmed it. Nice
yeah.
long upper wick, elevation and volume right off the key level. Could have taken your short, and I mean that literally marked the high.
So when it comes up, you're looking at the liquidity heat map, and you're looking for tons of liquidity up and to get filled up in that area.
Correct. So either it gets filled and then it rejects, but what I really like to see is the failure of them to get filled. So there's not enough orders to push us through that point.
Okay.
Does that make sense?
Absolutely. Yeah, yeah. And then after you see that, do you wait for the aggressors on the other side to come back in, and then you're entering your options position?
So like say we did have large sell orders sitting up at this 58.20 level. As soon as this candle closed, I'll even break it down to a smaller time frame most of the time and watch like a 2-minute. As soon as that candle closes and I see the confirmation that we have sell orders sitting there, I'm in right then and there. So like
Okay.
had I taken this trade, I mean it really depends. You could have taken it based off the either here or here. But yeah, most of the time 2-minute or 5-minute. And once that 5-minute candle closed, that was the icing on the cake.
Yeah. Yeah. So that's the point where, I mean, like the book map, you're looking at your candle confirmation, but you're looking at the order flow in book map.
Correct. And if there's not like sellers there, then I consider it significantly lower probability or sell order
Yeah.
sitting there. Sorry.
Will you take a smaller position at that point, or you just avoid it altogether?
Really depends on the overall situation. Because sometimes I will, sometimes I won't. Like with this, say we didn't have the sell order sitting there, we still have the volume confirmation and the reject. But had we gone up there and maybe like the volume was like way down here and we closed a little more bullish on the candle, like somewhere up here, then that would be a scenario where I'm like, okay, I'm not taking this.
Yeah. Yeah. And then, then how do you manage it after that? Are you looking for it to trade back down to, where you put your line there, and that's your take profit, or, um,
Yeah, so it's funny the way I trade, swing trading and day trading, I never really have price targets. I at least want a 1-to-1 risk to reward before I take any trim. So if I'm risking 5 points on ES, I want to at least make 5 points on ES. But from there, it's really just watching the price action and seeing, could we continue to go lower? So I was telling them earlier, the candle that confirms my trade, my stop loss is always right on the opposite side. So, say we had that supply zone right here, which is going to be, we'll make it this pink. We reject off of it. We wait for the 5-minute candle close. My stop loss is on the opposite side of the confirmation candle, which is this. So we would enter around 58.17. We would be risking, what, 4 points? I want to at least make 4 points, which we got within that very first 5-minute candle, right? So then from there, depending on the price action, I'll also use like VWAP to understand, okay, maybe we could bounce here, 21 EMA, maybe we could bounce here, whatever. But I kind of just trim as it goes in my favor and just move my stop because you never know how much the market is going to move in your favor. So the best
right?
thing we can do, and the only thing that we know, is how much we're risking when we initially get into that trade. So hey, we're risking 4 points. Let's see what the market can give us, but we want to at least make a 1-to-1 risk reward before we start trimming. Does that make sense?
Got you. Nice. Yeah, I mean, boy, the zero DTE, that's some, you've got a strong stomach.
Yeah, it's got its pros and cons for sure.
Yeah, nice, nice. Well, I don't know. I'm sorry if you had repeated a lot of things. Like I said, I just kind of jumped in here at the last minute. Um, is there anything else that you wanted to go over in kind of
Um,
how you're using the heat map or the volume and uh, in combination with what you're seeing with your higher time frames and candles
oh, I think one
zones?
question you asked that I forgot, I answered it earlier, but I'll answer it for you again. Is how I use like the combination of futures with like options. It's just mainly like, because what I'll do is I'll mark out both ES and SPY, just because the way that we trade in the post and pre-market, like levels can be slightly different. So I'll go through, I'll mark all my levels on, SPY, ES, and QQQQ. And just wait for us to trade into the level. So like say we confirmed the ES level, right? I'll take my SPY puts and then just base the whole trade off the ES, or vice versa with QQQ and NQ. If NQ trades up into the level and confirms, and let's just say QQQ fell short of its key level, I'll take the trade based off of NQ, take QQQ puts, and then just base the whole trade off of NQ.
Got you.
Yeah,
Okay. Okay. Yeah. Well, that's yeah, simple, straightforward stuff.
I get.
I mean, I don't have any other questions. Guys, get your questions in. Um, and I mean, you've got an options trader here, a zero DTE options trader in particular. If you guys want to get really aggressive with your trading, I mean, this is the time to answer or ask these questions. Got Brandon here at your disposal. Is that, curious about the 21 EMA on the question here? Why the 21 EMA?
Very interesting stuff that I'm not going to be a nerd about, but Fibonacci sequence, if y'all got time, look it up. It's very, very interesting stuff. But that's how my EMAs come into play. The 8 EMA and 21 EMA. And then if we were to pull up my swing trading chart, which is this one right here, you'll see I have the 21 EMA and the 34 EMA, which again stems from Fibonacci 34.
All right. There you go, BMX. And let's see. Okay, yeah, answering a question. Thank you, Stephen. Dan, are we all caught up on the questions here? Oh, I can't hear you. No. Are you muted?
I shouldn't
There
be.
you are. Okay.
Sorry, I think I've got some signal issues my end.
Oh,
So
okay.
we've got a question from Mo. For someone who's trading currencies, indices, and stocks, small cap volume trading, which plan do you advise, the light one or global?
Well, if you're trading currency futures, you only have one option. Well, you have two options. You have either global or global plus. The digital plus is only for crypto. And it depends on a few different factors if you want to get the global plus, which I think it's 99 bucks a month. The global is 50 bucks a month or 49 a month. And I would suggest just trying the global plus, I mean, for like a month and see how you like it. Because you can trade from the bookmap chart, which is a huge edge, being able to manage your trades from the chart. Anyway, these kinds of questions, guys, like we can cover in other webinars. I mean, the Pro Trader webinar here is all about the expert, and we've got Brandon here. If any questions in particular, how Brandon trades or trading options.
How BrandonTrades trades.
Yeah, exactly.
So we've got one from Mr. No Luck. What made you decide to go with options over other forms? And we've got a second from him as well. How do options play a role into the investing world? Sorry.
Yeah, so back when I started 2017, futures were there. They just weren't like, I guess, as mainstream as they are now. Just because there's like so many prop firms and stuff, it's like a lot more accessible. But back in 2017, it wasn't like huge, if that makes sense. And that's also just kind of where I learned was Forex and options. I don't trade Forex anymore, but yeah, that's just kind of where I started and what I was familiar with. And then as far as the investing world, I mean, people just like to do it because they like to own the equity or like sell premium and collect premium on their equity. But yeah, I personally don't sell any covered calls or cash secured puts. I'm just very directional.
And how long are you holding for usually? I mean, as you'd mentioned it, I guess it depends, like to see how it plays out for you. But I mean, is it minutes, hours, day, it depends?
Yeah, so as far as day trades, I would say a majority of them stem from a few minutes to like max 30 minutes. There is that, rare scenario where I will hold for a little longer. And then I was telling everybody earlier, I do really, really love to swing trade. So that could stem from a couple days, weeks. I've been in this IYR for months. I entered the $97 calls this day, or 97 calls and 100 calls for January of next year. Entered this day right here, this day right here. And I've just been slowly scaling out of my position, and I'm still holding some right now. And it's, what, 2 months later? Or the SLV that we talked about earlier. entered this day right here, and still have some of my position running.
Okay, so you're buying calls.
Correct. Or
Okay,
puts, depending on the
are
scenario.
they are they leaps, or are you how far out are you going?
Yeah, so for swing trading, again, day trading, it's typically 0 DT, but for swing trading, it depends on the time frame that I identify the setup. So because this was a quarterly setup, every candle's 3 months. I gotta go super far out, which is why I went to 2026. But something that I just took recently on what was it, Bristol Myers, that did 50%. I just went to next month. So I entered this day right here, had to hold through a little bit of drawdown, caught my nice 50% push, and then stopped out the rest break even, unfortunately, before they wanted to have news and gap up. So yeah, it depends on the time frame for swing trades.
Time frame of the setup. Okay. And but again, like just simple all in, all out, like, or not necessarily all in, all out, but like single direction.
Correct.
Okay. Not doing any crazy stuff like oh, I'm gonna, put a collar on it, or like I don't know, sell verticals, or create some spreads on it, or sell premium or buy premium, or I don't know, whatever.
Yes,
Just
and the main reason is because in the past I tried to add credit spreads to make it more directional and just got obliterated. So I don't do them anymore. Only
that's
directional.
a good reason. Um, I'm curious though, if that is the case, then y- y- I mean, you um, you found that just try to keep it, whittle it down to something very simple with options, because options can get so complex so easily. Uh, and so you have found like okay, like this is your kind of trade management part, is directional, and keep it simple even on swing trades.
Exactly. And then trying to get like the best entry possible. That way my risk is always well defined.
Got you.
Like again, in this scenario, you would have risked 4 points, which is to me like a slap on the wrist.
Right. Yeah. Well, really nice levels you're identifying there.
Thank
um
you.
yeah, yeah, really, really nice. And then so then I love it, you jump over to Bookmap, you're looking at your levels, and then you see your candle, and then you're looking for that confirmation.
Correct. And that's
Yep.
literally how I trade every day for day trades.
Yeah. Yeah. Nice. Let's see if there's any other questions in here. Mr. No Luck. As you can see, I mean, Brandon's the expert. Uh, when it comes to options, like, you can get hurt really quickly and easily. You may want to keep it, very, very simple here, as you can, as he explained, like, it's the simpler or the more, just what you're doing, and how to manage it. Uh, I don't know if you want to talk about some of that, Brandon, because like, people really, they say, oh well, shoot, I'm gonna hedge it now. I'm gonna, it's going against me. I'll sell some covered calls on it, or I'll do this, or I'll do that, like to try to minimize losses.
I mean,
Instead, you probably just say like, I'm out. I'm gonna cut it.
yeah, that's the best thing that you can do, especially 0 DT, because like if you start adding in like, the covered calls or whatever, to me it just I'm sure people can trade that and are very successful at that. I would just get way too confused and not understand what the position I even have is at that point.
Yeah, yeah.
So I
Are
just
you?
say, okay, I'll stop out at this point. If it stops me out, sell. I'm out.
Yeah, got you. Are you looking at any sort of like skews in the options chain, to maybe give you a little bit of an edge? Or, I mean, you're certainly going to get an edge at some of these levels, and that implied volatility is going to be going up pretty high. and then you're going to be, buying some puts up in some of those levels, for example. So you're getting a deal on the implied volatility. But do you look at anything else maybe in the chain that, oh, I see a lot of options, put and call transactions here or there. Is there anything like that that uh, gives you a bias or edge?
So for me personally, no, I don't look at that. I know people who do, and they're very successful at just watching like SPX option flow. But again, for me, I like to keep it so simple and just wait to see when do we trade to a key level and do we confirm it.
Yeah, yeah, yeah. Great stuff. All right. I would think we're over our time here. If there's any more questions, let's see. Or anything else if you want to close it out, Brandon, any kind of pearls of wisdom before we leave here?
Mm, really just stick with it and just keep grinding, stay motivated, and yeah, screen time is going to be your best friend when it becomes or screen time is going to be your best friend when it comes to becoming a profitable trader. Then always risk management. Risk management is going to be the most important. And I do see that one question about the 0DT options. It's just, again, understanding your risk. And yeah, if it hits your stop, get out. Always size accordingly as well. But that's really all I have.
All right, excellent, excellent. Well, I'm sorry I was late, Brandon, and but lots of good questions here at the end and discussion. Yeah, well, thanks, Brandon. Thanks for coming, Dan. Uh, so we can. You want to wrap it up, or we'll end the event here, and Brandon, we'll have you again soon for sure.
Sounds good to me. Whenever.
Excellent, excellent.
Awesome. Thanks very much, Brandon, and thanks everyone for coming. I'll end the event out now.
Yep. Thanks, Dan.
Everybody take it easy.